welcome everyone. So as you know, the BLG community continues to grow, and we want to be the #1 community globally helping ex-career people to build their dream business. And we bring on an expert each week in a Facebook Live, which normally turns into a webinar. I think Facebook Live's become the new version of webinar, but you can get a chance to go in on the page and also in the Facebook group, re-watch it, post some questions, and there'll also be a fantastic partner offer as well. So what I'll do now is hand you over to Meryl Johnston from Bean Ninjas, and she'll take you through increasing your profit by knowing your numbers. So over to you, Meryl.
Thanks, Paul. So today's session is about increasing your profit by knowing your numbers. So the key topics that we're going to be covering today are why accounting is fundamental to the success of your business. We'll be looking at the key financial reports that you need to know as a business owner and ratios. And then we'll also spend a little bit of time on how to optimize Xero for your business, understanding accrual accounting and who you need on your accounting team. So just a little bit about me. So I'm the founder of Bean Ninjas, which is an online bookkeeping business. My background is as a chartered accountant, and I started my career at BDO as a young auditor and spent some time in corporate accounting before branching out on my own and starting MCJ Consulting, and then went into Bean Ninjas back in July 2015. So let's jump into it. So why do we need to do accounting? And there's a couple of reasons. So firstly, we're required to file taxes. So we need accurate accounts within accounting software to submit those tax records. But I assume as a business owner, you'd also like to know how profitable your business is. And then one day you might want to sell your business. And to maximize the sales value, you want to have clear, accurate accounting records so that the purchaser of the business can have trust in the numbers that you've presented to them, which are then used to calculate the value of that business sale. And often potential buyers will want to go back 3, maybe 5 years. So you might not be thinking about selling your business now, but you want to be building your business so that if you do decide to sell one day, that you have all of those systems, including your financials, all in place. I put together this table which describes different stages of accounting systems. We're going to be focusing in stage 3, but I understand that some of you may be working your way from stage 2 to stage 3. So in this section here, you would be using cloud accounting software like Xero or QuickBooks Online. You would have a relationship with an accountant, and they would be looking after your tax lodgement, business structuring, and hopefully you'd be having tax planning sessions with them too before the end of the financial year. And you might be working with a management accountant or a virtual CFO, which would be providing advice around performance rather than tax, or some other kind of advisor. You'd have a bookkeeper that was keeping on top of the day-to-day transactions. And then you as a business owner would be reviewing reports, have a strong understanding of financials for your business, and would be meeting with some kind of advisor. And then you may also have an assistant or a virtual assistant that is helping with collating information and liaising with the bookkeeper and accountant, so that you're kind of out of that process of preparing accounts, but are in the process of reviewing them. So I'm going to assume that you have some of these basics for your accounting system already in place, so that you're using some kind of cloud accounting software like Xero, that you've got a receipt management tool. So it's important, whatever jurisdiction you're in, that you are keeping records and keeping copies of receipts and saving that somewhere in the cloud, like Dropbox or Google Drive is fine. There's also tools like Receipt Bank, which can integrate with Xero. So as you're building up your accounting system, they might be a good option to look at as well. And I'm also going to assume that you have your business banking all organised and feeding into your accounting software.
Yeah, so Meryl, just on Xero, and I know that well done on being 2017 Queensland Xero Supplier of the Year. Your view, I get a lot of clients that come and ask us, and a lot of people in the community, you know, what platform do I use? Do I use Xero? Do I use QuickBooks? You know, what sort of Some people are still sort of on MyOb and they're debating whether they should stay on a non-cloud base. What sort of your quick advice as to why you prefer Xero? Because I know that you do. Why do you sort of prefer it versus the others?
So my first preference is that cloud accounting software. And the reason for that is because there's bank feeds and a whole lot of integrations, which increase the accuracy of the accounting records because there's no duplication or manual retyping of data. And then the other is it makes it more efficient. So back when I started BNinjas, we did an analysis because we wanted to focus on one piece of accounting software and become the experts in that. And so that was 2 years ago, but we did a detailed analysis of each of the different features. So the sales function, bills, reporting, payroll between Xero and QuickBooks Online. And at the time, Xero seemed like the better piece of software in terms of the reports that you could get out and the ease of use. That was more for business owners. So as accountants, it's pretty easy for us to pick up any accounting software, but I feel like business owners need to be involved as well. If you're sending invoices or want to run reports, it needs to be intuitive. And so Xero also had that advantage. QuickBooks Online is also a good piece of accounting software. MyOb's been left behind a little bit and is trying to catch up. So that was the reason that we chose Xero 2 years ago, and I feel like it still is ahead of where QuickBooks is in terms of the additional. So all accounting software has the main features and the ability to invoice and have bank feeds, but it's all those little extra features that save you time, like sending repeating bills and making it easy for your customers to pay you, that make Xero, in my opinion, generally better for the kinds of businesses that we work with, which are small businesses usually selling online as service businesses.
Okay, great.
So in this next section, I've got some tips for service businesses. So Paul described that in the Build, Live, Give community, it's mainly comprised of service businesses. So these tips are around how to optimize Xero setup, but the same tips would apply to other accounting software so that you're getting that accurate information and you've automated as much as you can. So then you can start to focus on reports and the data you're getting out of the software rather than what you're putting in. So as a service business, you probably, at least at the beginning, are sending invoices. And if you're sending invoices, then you want to encourage your customers to pay as quickly as possible. So you can set up a payment option within Xero with PayPal and with Stripe so that your customers will see this pay now option and they can click on that and then pay you immediately. And Xero has data around that to show that I can't remember the percentage, but it definitely increases the speed in which you get paid by your customers because it's easier for them. Something else to consider when you're sending invoices are the sales categories that you're using. So if you're a consultant, you may have different types of services that you're selling and you may want to track between them. So you may have training, you may have your general consulting, and you may have some other particular products. And so if your chart of accounts is set up to track those different sales categories, then when you're raising those invoices, you'd also need to make sure that you're selecting the appropriate sales category for that invoice. And finally, in Xero, there's a couple of things that can help in, again, reminding customers about payment. So things like sending statements and automated email reminders. With automated email reminders, I'd just be careful turning that on because if your bookkeeping isn't up to date, it's possible that you could send out a reminder to someone and they have actually paid and you just haven't reconciled that transaction yet. So just be mindful of that. I think most of us are aiming for recurring revenue with our service businesses and with other types of businesses. So if you have managed to go down the recurring revenue path, there's a couple of things to consider. So one is is it a direct debit relationship with the customer and what tool are you using for that? And so some common tools are Stripe, eWay and Easy Debit. PayPal, you can also do recurring payments from PayPal, but I previously used that myself and then moved to Stripe because there was more functionality and it was easier to change payments. So if you are using the invoicing function within Xero, you can also turn on repeating invoices. So if you know you're charging someone $1,000 each month, you can automate that using repeating invoices in Xero and have that sent out automatically to the customer. A common question that we are asked, especially for people that are selling online through a web platform, is how do they integrate that information with what's in Xero? So if you're selling on a sales platform or through a shopping cart, so it might be something like Ontraport or Thrivecard, that's probably connected then to the payment gateway merchant account, which is where the credit card details get entered, and then what causes the transaction to end up in your bank account. And usually here, that would be Stripe or PayPal or some other kind of merchant account. So this is a question we get asked all the time, is how do we integrate that with Xero? And the quick answer to that question is it will depend on what platform you're using for shopping cart, and also whether you're using Stripe, PayPal or something else. And the perfect way to integrate it will depend on that. But some general considerations are what information do you need in the accounting software? And that's probably customer name, amount, whether there's GST or not. So are they an overseas customer or Australian? And what sales category does it need to go to if you're splitting out sales? And sometimes it's easy to send that information from the sales platform, for example, Shopify, into Xero because there's a good integration. But with tools like Ontraport, historically there hasn't been a good integration, and either that can be entered manually or you can use information from Stripe or PayPal, which also captures the country of the purchaser, and use an integration that way.
Great, Meryl. Can I just bring up two key points here? One is often people setting up recurring invoicing, what they'll do is give the service, let's say they might give a 1 or a 3 month trial, and then they get the client to sign up on a direct debit form. What we find really beneficial is you actually get them to sign up on the direct debit form, you forward forecast when that's going to be active, and at worst case, if they don't like the trial, they can cancel it, but at least it's all set up, rather than in 3 months trying to contact them to get them to do a form. So that's certainly one tip. The other key thing is around, actually, I've completely gone a blank. What was the other point that I was going to make? No, sorry, it's jumped out of my head. But when it comes back, I'll let you know.
Yep, sounds good. So the other thing I wanted to mention was around Stripe and PayPal. So they're the most common payment gateways and merchant accounts. So with Stripe, so there's not a direct bank feed with Stripe into Xero. There are add-ons that can do that. So there's tools like SilverSiphon, Swoosh.io, and there's a couple of others, and it will depend exactly what you want the software to do as to the integration. But it's very helpful having Stripe as a bank feed, because otherwise, as you know, you might receive payments from 10 customers on a particular day, and then you'll see in your bank account one amount, which is net of fees and is a breakdown of all of those payments. Whereas if you have Stripe set up as a bank feed, you can see all of those individual payments and then allocate them to the correct area. So that's a common question. And also, because it's a little bit more complicated to set up in Xero, it's somewhere where we see a lot of errors. The other area
and therefore, who do you suggest sets that up? Do you normally set that up?
We normally set that up. Yeah, we normally set that up because there's also cut-off issues to make sure you don't double count some of it. It's a bit tricky to set up and make sure that there's no duplicates and you don't miss any transactions. So yeah, we would usually set that up.
And sorry, the other thing I was going to mention, and maybe you've got a more sophisticated way, but failed credit cards. I know that a lot of people sit there happily thinking that they're getting all this income, and then they realise that there's actually been failed credit cards. So how do you capture that in the process? Because I suppose what I'm saying is that recurring revenue isn't always recurring if the credit card isn't successful. That's
true. So in fact, in my business, we have a manual process for that. So we have a VA that's checking daily our Stripe account, and then we have an automated or a list of follow-up emails. So that's happening on a daily basis. would like to automate that, and we're testing a tool called Stunningly at the moment, which can be used to follow up. It's a Stripe integration, so it can be used to follow up failed payments, but I can't speak as to whether that is a good tool or not yet, but I will be able to. I can give you my opinion on that shortly.
Okay, brilliant, great, thanks.
So PayPal is probably the other most commonly used tool, and PayPal it can be set up as a bank feed in Xero, and the most common mistake here is that you need a separate bank feed for each currency, and especially if you're selling in, say, Australian dollars and US dollars, if you don't set up those two currencies, then you'll probably be missing revenue coming into Xero because of that.
Yeah, look, and we advise, I know that a lot of people have complaints for customers, especially Australian customers paying USD, but I think, you know, it's just become so common now that you're a global business. My advice is just set up on USD, and I don't think you lose many customers based off that, and then it just makes it simplified because you've got one currency across the globe rather than having multi-currencies. It's not always the case, but that's what we tend to recommend for clients.
So now we're going to move into the key area of the session, which is looking at reports. And this is one of my favourite quotes from Peter Drucker: "You can't manage what you can't measure." And so we want to start measuring key ratios and line items within the accounting software. And as a business owner, you don't necessarily need to know how to do all of the accounting, but you do need to know what reports to receive, and then when you do get them, what they actually mean, so that you can use them to make decisions to drive the growth of your business. So some essential reports, so at a minimum, you'd want to be receiving a profit and loss every month, and that would have comparatives, or so by comparatives, I mean you're comparing it to previous months, or if you have a budget, then you could compare the actual performance to your budgeted performance. And also looking at a balance sheet. There's some other reports that might be, so once you're getting value from the profit and loss and balance sheet and they make sense, you could start to introduce some of these other reports. So tracking profitability by job or by customer, having a cash flow forecast, which is projecting cash inflows and outflows, so you know what cash you have available and expected bank balance. A cash flow forecast is different to a budget in that the forecast is around cash, whereas the budget is about profit. And so you're tracking your budgeted profit against your actual profit. And this last one is bank reconciliations. So bank reconciliations are something that every bookkeeper should be doing. And that means comparing the bank statement balance to the bank balance that's in the accounting software by running a reconciliation report. This is a very simple step and it's often overlooked. And this is the key place, with my audit background, this is the key place we look for fraud. So if bank reconciliations are being completed and bank accounts are being matched to bank statements, there are still ways that people within the business could be perpetrating fraud, but it is much more difficult and possibly would have to involve collusion. So that's a key risk mitigation step, to have bank reconciliations and occasionally ask to see them.
Yeah, and Meryl, if I can just bring up a couple of quick points on there. One is I highly recommend that no one ever has access to bank accounts, i.e. they can put in a payment, but they can never authorise a payment. So, you know, I've got people all over the world that work for me, and I use a particular app on Combiz. I've got a login, and I'm the only person that can authorise money. I don't have anyone with access to my PayPal account, so they can never get in. I do all the authorisation. So that's certainly something in our community that we strongly recommend. The other one is going in monthly and looking at the GL codes. I know you're going to talk about that, but if you look at bank reconciliation and reports, to me also, the report's only as good as the information. I know you'll get there, but what I do is once a month, I just go into my Xero and I look at the largest amounts, and then I see if those largest amounts are being allocated correctly. And, you know, your bookkeeper will do a great job, but sometimes, you know, there's some expenses that may be misjournaled. So it's really important to go in and check that. And I think that's up to the owner to go in and do that. and that's just one additional step on top of the bookkeeper. What are your thoughts on those two things that I've just mentioned there?
Yeah, I agree. So I think it's really important to be careful around who has access to bank accounts, and it's fine for someone to have access to upload information but not approve it, and similar to PayPal. If you are going to, so as a business really expands, if you do want to completely outsource, which I think is quite risky, but if you have someone that you do want to have access to authorised payments, then make that person separate to the person that's entering the payments. So there's that segregation of duty, and you don't have one person that can make adjustments to the accounting system and also make payments. So if you're going to do that, at least make sure they're 2 or 3 separate people. And the second point was going into the accounting software and having a look around and making sure that those big payments are allocated correctly. And I do encourage every business owner to jump in and have a quick look around the accounting software every so often or once a month, I think it helps you with your understanding, and also it increases that communication that you have with the bookkeeper as well, so that everything is being allocated correctly. And I think, Paul, the term you used was GL code, and that's a term that's interchangeable with the chart of accounts. So some people may or may not know both terms, so I thought I'd just clarify that too. So we'll move now into how to actually review these reports. And I think before actually even opening or having a look at the profit and loss and balance sheet, you'd want to have a look about what's happening in your business and what you're expecting to see. So then when you do review the report, you can work out whether it looks accurate or in line with your expectations. So in this example, we know that there were new laptops that were purchased, a key client has paid an overdue bill, and that an extra staff member was hired. So before we look at the reports, let's think about what accounts these would impact. So if new laptops were purchased, we'd probably expect there to be an asset increase showing on the balance sheet. If a key client's paid an overdue bill, that bill would have been showing in accounts receivable as owed to us. And if they've paid it, then we'd expect to see a decrease in that account, accounts receivable with debtors. And hiring a new staff member, we'd expect to see an increase in wages costs on the previous month, assuming that there's been no other major changes to wages. So now we're going to have a look at the profit and loss. And so we were expecting there to be an increase in wages, and there has been, and it's continued on. So that is in line with our expectations. The other 2 items affected balance sheet accounts. So we'll come back to those when we have a look at the balance sheet. But while we're reviewing this, let's have a look in terms of, are the numbers consistent with previous months, and are there any accounts that are jumping out? So this rent figure here, previously it was $1,500, and then it's jumped up. So I would want to check whether there's been outgoings included in this invoice, whether there was an increase in rent, or whether potentially something's been miscoded. So I'd flag that as something to investigate. The fact that there's a negative in entertainment, it's not really in line with my expectations. I don't think we've had any credits from suppliers. So I'd flag that as something to check with the bookkeeper. And then I know that we've had a big increase in sales, so that looks in line with expectations. So you can see this first look at the accounts is to make sure that they're accurate and in line with expectations, and you might need to go back to the bookkeeper to make sure that everything is in the right place. And it may well be, in which case then you can start to use this report to make decisions. So the first cut of the reports is to make sure they're accurate, and then when you know that they are, then you can start using that data. So I've made an assumption here that everyone would know what a profit and loss statement is. With the balance sheet is probably where is less clear. So I'll spend just a little bit of time on that. So a balance sheet is showing what the business owns and what it owes to other people at a point in time. So this is saying, it's a little bit out of date, 30th November 2015, this is the money that was in the bank account. This is what was owed to the business in accounts receivable at this particular date, the assets that were on hand, and then also what was owed to suppliers, the GST that's owed to the ATO. Sorry, that's an accounting adjustment. funds that have been introduced by the owner, and then PAYG, again, that's owing to the ATO. So with the balance sheet, you wouldn't normally expect there to be as much movement in these accounts as you would with a profit and loss, but a balance sheet is often where the errors sit. So when I'm reviewing a set of accounts, I usually have a quick look at the balance sheet first and just make sure if there has been a movement between the months, that it makes sense to me. So for example, here we knew that there was computer equipment purchased, so an increase on the previous month does make sense. And we knew that we received money from an outstanding debt, so we'd expect accounts receivable to decrease, which we can see as well. So I think, well, the trend that I've seen is business owners will go straight to the profit and loss and ignore the balance sheet, but I do recommend having a look at the balance sheet because that's where most of the errors, or in my experience, that's where most of the errors are. So make sure that's right first, and if that's right, then the profit and loss by default is correct as well. This next slide is around job costing, or it could be customer, so tracking the profitability of particular customers. So this can be set up using tracking categories within Xero. So across here, you could have customer names. And I'm just going to give you a story about the way that I've used customer profitability tracking within my own business. So we have customers that are on recurring invoices, and we set up a tracking code for each customer. And then when the bookkeepers spend their time on particular clients, they track their time and allocate those costs again to particular customers. And this was really helpful when we were starting out to get an understanding of the types of customers that we worked with to then identify our ideal client. So we were able to make groupings and see trends. So customers that were in particular industries or customer types that were profitable or that weren't profitable. This is also really useful to start conversations. If there are customers where they're unprofitable, it flags it so that you then can go and have a look at the scope of work. Because I think recurring revenue with a service business is definitely open to scope creep, where the nature of the work that you're doing gradually expands. But if you're not on top of it, you probably won't have a conversation with that client to talk about scope creep and or the change of scope, and therefore that a revised price is required. So this can be done through Xero with setting up a tracking category and then setting up tracking codes.
Yeah, so Meryl, just a couple of quick points on this. So one is, I think a lot of people love the concept of tracking by customer or job, but the time sheeting components, most people can't stand time
Yes.
sheeting or recording of time, and especially if you're not billing that way, I think it comes a little complex. But what I do say to people, and I do this exercise with all my club members, is let's just take some jobs in isolation, or let's take your process in isolation. So yesterday I had a client and we talked about they charged for a workshop. It was a marketing agency. And I said, okay, so your workshop, that's your retail. Now let's look at all your costs. And they said, oh yeah, look, it takes my team this amount of time and this is their rate. I said, okay, but what about your time? What about the sales time you put in it? What about the admin time? What about the bookkeeping time? Like, what about all the overhead? And they quickly realized that actually there wasn't the profit that they thought they were making. So you can still go through and do that exercise. It may not be as sophisticated as what you're saying here, and I think that's the gold standard. But I think, really getting someone, whether it's your bookkeeper or someone like myself, to really challenge your numbers. And most people don't allocate enough costs when they look at the profitability, and they'll realize that the number one item they're selling is often in actually a loss-making product, but they keep selling it. So everyone always comes to me and I want to sell more. I'm like, yeah, but are you actually making profit out of the thing that you're selling? So let's sort that out first, which is either spreading some of the labour by bringing in virtual people, etc., at lower rates, or putting your prices up, or a combination of both. We get it profitable, and then from there we start to scale. I saw you not, I can see you nodding there, but what's your experience based on what I've just said?
Yeah, I agree 100%. It's very easy to miss cost particular projects or particular jobs by not factoring in all of those things that you mentioned. And I do agree, timesheets are a real pain. And if people haven't come from, so me coming from an accounting background, my team are used to that because they've grown up or they started their career and they've had to have timesheets. But I think if someone's not from that background, it'll be pretty hard to get them to track their time. You can also estimate it too. So if you know that you've got someone that's managing 6 clients, then you can use some estimates to apportion their time to particular jobs. And while it might not be spot on, if you have a conversation with them and get a feel for it, you can still kind of track it. And then you can also build it up, like you said, with particular clients and look at the time taken and the rates of particular staff. And I think it's a very valuable exercise.
Yeah, and the last quick build on that is start with your biggest clients and your biggest selling items. So you don't have to do it across everything. So, you don't have to tackle it all at once, but just go to who you sell most to and also what you sell most of, and just do the profitability on those first.
So next up is ratios. And I know, Paul, you've got a great ebook which describes some of the key ratios that business owners should be looking at. I've just got a couple in here. So especially as a service business, your labour costs make up part of your cost of goods sold. So your gross profit margin is a key ratio within your business. So to calculate that, you're looking at sales, less cost of goods sold, and that would include labour cost, and probably that is the major cost. And then you're looking at that gross profit as a percentage of total revenue. So I think that's key. And then there's some other ratios that you can look at. So things like direct staff costs as a percentage of revenue, overheads as a percentage of revenue, marketing costs as a percentage of revenue is probably relevant too. With ratios...
Sorry, Mel, just quickly on that. With cost of goods sold, what's your view for the owner's salary? So I know, for example, I have my cost below the line, not in cost of goods sold, but I actually do the selling. So do you think that people should split some of it or have it below in COGS? What's your view on that?
I think it depends on the type of work that you're doing as an owner. So I'll use myself as an example. So if I'm filling in and covering bookkeeping work, then my time gets coded to cost of sales, because if I didn't do it, it would skew the job profitability. If I'm doing sales work, then we have a sales staff line item, and we have sales actually sitting below the line, but some people would have that as cost of sales. So it's arguable. And then in a CEO role, my time there, I treat that as an admin or a running cost of the business, because it's not a direct cost of servicing customers. So to answer that, I think most business owners wouldn't be spending 100% of their time servicing clients. So it's probably just worth doing an estimate based on how much of your time is spent servicing clients and how much is spent in running the business.
Right, thanks.
So I think a lot of business owners want to just dive straight into ratios. But the reality is, if you don't have a chart of accounts that aligns with ratios and you don't have consistent coding to particular accounts within that chart of accounts, then you don't have accurate data to then go and look at those percentages. So I think it's important to go back to basics and make sure that your accounting system is working well first. So remembering the previous slides that we talked about, you've automated it where you can, you've got accurate information, and then you've spent some time looking at the chart of accounts. So what account codes are you using? Do you want to track advertising spend, say Facebook ads, separately to content marketing costs? If you do, say, and marketing subscriptions, if you do that, what suppliers are going to those different accounts compared to, say, some software subscriptions going to an admin cost? So it's really important to get that right. And Paul, we've spent a bit of time talking about this recently, because it's important for there to be consistency. So everyone in the team needs to know what marketing means for this particular business and what suppliers get coded to that particular account compared to another account.
Yeah, correct. And look, one of the things that so as I said, most of my team are overseas, and sort of my my key operations person, I'm actually incentivizing them to get the total direct labour as a percentage of revenue down. So actually recording that accurately and having that in, giving her an incentive for hitting certain ratios then helps motivate her to do more automation, because I think, you know, a lot of this labour is your biggest cost. You've sort of talked about that in my service businesses. So the more you can automate it, the more productive you can get that labour. And what I often see is people have a direct correlation between revenue and labour. So as their revenue goes up, so does their labour, and unfortunately they never improve their margins, their gross profit or their net profit. So I think that's really important reason why you, another great reason why you can track these ratios.
So I've got some examples here. So these are just made up accounts in terms of the chart of accounts and made up numbers. But the purpose of it is to show how you can adjust the account. So the account names, so which make up the chart of accounts, and then also how you can change your reporting layout so that it's very easy to track these as percentages. So here I've set up this reporting layout so we can easily see that income for the month was 100,000, and then there's different groupings. So admin, there's a couple of different line items, and so the costs have been allocated to these accounts, and then we can see what the total admin cost was for the month, and it's very easy then to work out what admin as a percentage of total income is. And the same with marketing. So there's different types of marketing accounts, but we can see the total marketing spend was 19,000, so 19% of sales, which sounds quite high. We can also here track the gross profit margin. So these direct costs, which are what Paul and I were referring to earlier, so these are the staff costs that are involved in directly servicing clients to generate this income. And so we can easily see here what the gross profit margin is, and then the percentage, gross profit percentage.
Fantastic. And Meryl, so those sections are completely customizable. So you can have the subsections and the items under it. A service like yours, I know that you do our bookkeeping, which is fantastic, but we can say, look, we want it set up this way to match these ratios, and you guys will then go and implement that.
Yeah, exactly. So it's the whole thing is customizable. So the names of the subheadings like admin and marketing, and then the names of the accounts and how you group it, and also what you decide is part of cost of sales and what you decide is part of the general operating expenses. All of that's customizable.
Yeah, and look, so often I'll have someone that comes into the club or the mastermind or some advisory clients, and what their strategy is versus what their Xero file looks like is worlds apart. So I think with your great advice, and you know that's why you use a professional bookkeeping service like you guys to bring those worlds together, so that your strategy is actually getting tracked in Xero, and there's a good alignment to that. And I don't know, it's very rare that I see that alignment.
Yeah, absolutely. And I think what would commonly happen is that a business owner would track this information in a spreadsheet based on what they know is happening, and then use that spreadsheet to calculate the ratios. Whereas really all of this information is already in the accounting software, and the accounting software should be the source of truth. So it's just a matter of getting this set up, and there is a little bit of effort in getting it set up right, and there is some communication and training time required to make sure that the bookkeeper and the accountant understand this as well. But it really is worth the effort, because once it's set up and it's running smoothly, then that's it. You might need a little bit of maintenance when new suppliers come on board, but apart from that, once it's set up, it will run smoothly and you'll start getting accurate reports. So this next slide is just a variation. So it's the same numbers, but I've just changed the reporting layout to show you an example of how customizable these reporting layouts are. So depending on what figures you want to focus on. So a lot of service businesses who are going down that recurring revenue path may want to focus on the margin on their recurring revenue rather than their overall gross margin, because that might be the key number for them. So in this example, I've just changed the reporting layout so that the recurring revenue has been grouped together with the recurring costs, so that we can quickly see what the profit or the gross profit on that recurring revenue is. And then also the same with the other income up here. We've grouped the other income, and then the costs related to generate that other income. And you'll see the overheads down here are similar. And so you may actually request from your bookkeeper or your accountant that you might want 2 different types of reports. And it's possible within Xero to say different reporting layouts. So you might be receiving a couple of different profit and loss reports. So it's really easy for you to see these key numbers. Or you might even ask them to summarize it for you so that you've got a one-pager that pulls out these key numbers.
Yeah, and Meryl, is it easy to get a list of customer, so your highest to lowest paid customers in Xero? Because one of the key things we also look for is that you're not too customer dependent, that, you know, more than 40% of your revenue isn't in one customer. Is that easy to pull out, or is there a standard report for that in Xero, or do you need to customize that?
So there is customer reporting which you can do from contacts, but to get that, to run that report, well, for that report to be accurate, it means that the contacts need to have been used consistently in Xero, and often they haven't been, which means you could run a report and a customer's got 3 different contacts in Xero, so it wouldn't pick that up. So the safest way to get reporting around that would be to just click into what's in recurring revenue for this month or for a period of months, and then just sort it by amount, and then divide it by the total revenue, and then you could see what percentage that customer makes up of the total revenue. And I say that's probably a more accurate way of doing it. You should be able to, I mean, there are customer and supplier reports, but I've seen contacts often aren't managed so well in Xero, so I probably wouldn't recommend running those reports unless you know that your contacts are very clean in Xero.
Okay, great.
So this next example is, again, it's just a different profit and loss layout, and this time it's showing the budget, so actual compared to budget figures. And Xero also, and other accounting software, would provide you with the variance and then the variance percentage. And you can quickly see, okay, red, I need to have a look at that. Okay, advertising was 10,000 more than budget. Let's go and investigate that and find out why. And it might just be a timing difference. Maybe you were expecting that to come through next month and it's been budgeted for next month. Or it might be a cost that you weren't expecting, and you need to go and investigate and make some changes in the business. So to do this, I was just going to say, to set this up, you would need to prepare a budget. So you would normally do that in Excel, and then that can be uploaded. The budget gets uploaded into Xero usually for a financial year. And then once it's in Xero, then you can run reports on the current month and year date.
Right, and I'm assuming because the expenses, if you spend less, it's green.
Yes.
If you spend more, it's red. So that's why there's less cost of goods sold. I looked at that and thought, hang on, why is that green?
Because I've got the cost of sales expenses up there. So yeah, spot on. So did you have anything else you wanted to add around those reports or ratios, Paul, before I move into an explanation about what accrual accounting is compared to cash accounting?
No, my only point is that it's for a lot of entrepreneurs, this isn't something that they enjoy doing. So I think get a really good bookkeeper to make it easy, and also build some routines. So don't expect that you're going to get there straight away, but over time you'll get there. You know, it's the same as sales, the same as marketing, same as any learned discipline. I think this is a brilliant discipline to have, but don't be too hard on yourself. Just make a start and you'll get there over time. It doesn't have to be perfect straight away.
Yeah, I totally agree with that, Paul. And I think it is a bit of a process. So having an accounting system up and running, it's important just to work on one thing at a time. And then gradually, over a period of months, you'll have that system working, the reporting, and as you look at reports every month, you'll start to build that knowledge and that understanding. But it won't happen overnight. So this example is to explain the difference between cash accounting and accrual accounting. So we've made a $10,000 sale to a customer in July, and they've paid in August. So if we're doing cash accounting, the $10,000 would be when we receive the money, which is in August. Whereas if we're doing accrual accounting, the sale would be when we make the sale, which is in July, not when we actually receive the money. So this is a simplified example, but I think it shows you the difference between cash accounting, which is when the money comes into or leaves your bank account, and accrual accounting, which is when the underlying transaction happens. So when did you send that invoice and generate the revenue, or when did you incur that expense, even if you haven't paid for it yet? So here's
sorry, Meryl, just so why would you use one over the other? So what's your recommendation if you're a service-based business, which a lot of our community are? Why would you use cash over accrual?
So cash accounting is the simpler version. So normally everyone starts off doing cash accounting, and the best practice is accrual accounting, but it takes more time to do accrual accounting, and it's more expensive and more complicated. So there's a cost benefit to it. And if a business is in their first year and is a sole trader, then the cost benefit for doing accrual accounting probably isn't there. So I think that's a conversation to have with your accountant or your bookkeeper around when it makes sense to start doing that more detailed and more accurate style of accounting, which is accrual. So I'll give another example and then spend some more time on that question of yours, Paul. So in this second example, a business is paying for insurance and they're paying 12 months. So usually you pay insurance for the year. So it's 12 months and it's $12,000. So in your profit and loss, January looks like a bad month because you've paid this big expense and it's making that month look unprofitable, whereas it isn't actually unprofitable. It's just that you've made a big payment. So in true accrual accounting, you would spread that cost out over the 12 months so that you had $1,000 in each month. This style of accounting, to do that, you would need an accountant or a bookkeeper to keep a manual spreadsheet and then make that adjustment every month. So it would smooth your figures, but it is significantly more expensive to do the accounting that way. So whether it makes sense for you, again, that's a conversation to have with your accountant. I'll add something else there. So a lot of our kinds of businesses where our major costs are staff and software subscriptions. The software subscriptions, you may pay some annually, but most would be a monthly subscription, and you're paying it at the same time as you're getting the invoice. So there wouldn't be much difference with cash and accrual accounting. And if you're paying staff weekly, again, there wouldn't be much difference with cash or accrual accounting. So for our kinds of businesses, it's probably if you're making a lot of annual payments, like annual software subscriptions, that could be distorting your figures. Or if you're issuing credit to your customers, so you're invoicing 1 month and then they're taking a couple of months to pay. If you're invoicing from zero, you'll have captured that correctly with accrual accounting. Probably the main gap that you might have with accrual accounting is if your suppliers are issuing you credit terms and you're only entering that transaction when you actually pay for it. But I think with our kinds of businesses, it's not that common to have major suppliers provide goods and then we don't have to pay for it for a few months, because most of the types of businesses we're working with often would expect payment up front. So we'll move on now to who you need on your accounting team. And this is important, I think, to understand each of these different roles and what your role is as the CEO or the business owner, and what the roles of these other players in the team are, so that you can help them to do a good job and keep them accountable too. So as the CEO, you're not the accountant, but you're still a key member of this team. So you're involved in strategy for the business, and you need to know enough to understand the reports that you're getting and make decisions based on those. You'd have a tax accountant, and this is what we talked about at the beginning of the session. So they're lodging tax returns, but they should be giving you some strategic advice around the right structure for your business, the most tax effective way of getting profits out of the business and how you're paying yourself, and also planning for that before the end of the tax year so you can actually implement some of the strategies. Some tax accountants also have management accounting skills or virtual CFO skills, but a lot won't. It's quite a different skill set. So it would be good whether it's your tax accountant or someone else, but getting advice around improving the performance of your business based on these accounting records. So setting some goals around the ratio. First of all, identifying what ratios you're tracking and then setting goals around those and making decisions around that. They can also help with creating budgets and cash flow forecasts. And generally around their role is more around performance of the business rather than tax. A bookkeeper is different to the accountants in the accountant, the tax accountant and virtual CFO, they're not inputting the data into the accounting software, they're more strategic. So they're using the information that's there to provide advice. And so usually it's up that they're a higher skill set and more expensive. So you don't generally want to be paying accountant rates for the bookkeeping work. So the bookkeepers, they're responsible for making sure that all of the transactions are entered into the accounting software accurately and in line with the chart of accounts and the chart of accounts coding rules that you're wanting, so that then the strategists can then use that information and rely on it. And if you've got a lot of transactions and as your business grows, you may also have an admin person involved, because bookkeeping there's still a certain skill level required to do that well. But if there's a lot of grunt work and data entry, then it can be worth having the admin person involved and helping with some of that. In terms of the right accounting team, so when you're very first starting out, it's probably a business owner and accountant. Admin and an accountant, I think, is a terrible combination, because then the accountant, if you haven't got a bookkeeper there, there'll be a lot of rework time with someone with only admin knowledge doing the bookkeeping. Bookkeeper and accountant, that can work well. And as your business grows, I'd be looking for this combination where you've got admin doing a lot of the data entry, a bookkeeper reviewing the work of the admin person, and then an accountant, and that's used for the tax accountant and the virtual CFO, using that accurate information to give you good advice.
Right, and Meryl, can I just say that often people say, look, I can't afford it. Like, you know, I'd love to have all this. It sounds fantastic, but I just can't afford it. The number one way you can pay for it is obviously through revenue. But that aside is going back and renegotiating with suppliers. So you've got your big suppliers that you may not have negotiated for a while. And normally if your business is growing, you're actually giving them more value, giving them more benefit. Go back and renegotiate. I do it all the time for my telco, for all of my key suppliers. I go back and renegotiate, and I use that to then fund some of the things that you've talked about today. So that's one way that has been very successful to help you implement these additional resources.
Yeah, and that can actually apply to your accountant too. So if you've got all of your information in Xero and everything's accurate, all they have to do is some tax adjustments to lodge a tax return. Any extra advice, definitely you need to pay extra for, but it's worth having that conversation with your accountant too. If you've got all of this set up and running smoothly, then paying huge fees to get your tax return done doesn't make sense, because they're not doing a whole lot of work. Accountants might not like me saying that, but they want to be providing you with that value add service where they're helping with tax planning or with strategy. So that's another incentive to get all of this done well, so you're maximising the accounting spend. So a couple of bonus tips before we wrap up. We've talked about financial reports and ratios, but I just wanted to flag that again, that you need to understand them generally, but you need to understand them specifically for your business and put the time in to learn that. Have a look at your chart of accounts. And again, it should be custom for your business and the key ratios and KPIs that you're tracking. And then it's not just about coming up with that chart of accounts. That needs to be communicated to your team too, and anyone that's involved in the accounting system, so everyone understands that and is doing things consistently. And then the last tip, which is, it's not something that we've touched on in this session, but just having a separate account to set aside money for tax. So GST, PAYG, put super in there, income tax, just so that you're putting aside money and you don't get a surprise at the end of a quarter or the end of the year thinking that that's profit that's payable to you, and you've got a lot of money in your bank account, where in fact you're just holding that money on behalf of the ATO. So set that aside so you know that it's not yours. So just to recap, the key topics that we've covered today are looking at why accounting is important. We looked at some systems and tips for optimizing Xero so that you're getting accurate data into the accounting system efficiently. We looked at financial reports and how to review them and setting expectations before you look at the reports. We looked at a couple of key ratios and how you can set up your accounting, your reporting layout to make it easy to extract those ratios, but make sure you look at your chart of accounts and get that customized before you start worrying about ratios. We spent a little bit of time on the difference between cash accounting and accrual accounting. And then we also looked at how you build your own accounting team. So I just wanted to wrap up and let you know that I'd be happy to help in terms of getting the chart of accounts set up for your business. So this is an offer that we've put together for the Build, Live, Give community. And if you do feel like you would like to have a chat about your business needs and coming up with a custom chart of accounts that aligns with your business goals, then that's something that I'd be happy to jump on a call and work through that with you, come up with the custom chart of accounts, and then also put together some instructions so that it's very clear for your bookkeeper and accountant what they need to do to keep that coding consistent. Great.
Excellent, brilliant. Thanks, Meryl. And just on the last point on your support of the community. So we actually, got, as I said, a virtual team overseas, real people in the Philippines, and we used to do it all in-house. I had a dedicated person that was sort of juggling, doing the bookkeeping, doing other roles, and it was never quite right. We moved across to Bean Ninjas and couldn't be happier because it's what you guys do all the time. You also give some really good strategy advices to things you can improve, which you've demonstrated today. I think it's always best to have a specialist in your corner that's all they do, and if they're not the best at it, their business suffers. Where if it's part of everything that you do in your business and it's not your core focus, I don't think that's optimizing your use of time. So fully endorse Meryl and her business, Bean Ninjas, and I'm really excited that you've given this great offer that can go into the partner community. So thanks for being on Facebook Live today, and really appreciate, Meryl, your expertise that you've shared here today.
Thanks a lot, Paul.
Okay, brilliant. I will now close it down. Thanks, Meryl. Bye.
Thanks, bye.